Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward to what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had a more quiet week here with the ranges narrowing. Investors continued to digest the big rebound that we had that started right after Christmas. And while the market did appear somewhat softer, it barely gave any ground at all. What's different is the bulls seem to be no longer winning the battle, as it's more of a standoff now, with rallies then being met with selling. It's not something that we had seen for quite a number of weeks. Background news, well, it's soured a bit. We get more indications that the tax cut that induced growth back last year, well, the effect of that was waning. And now we're seeing that there's other things in the background that seem to be, heating up and maybe a little bit more problem. China data keeps getting weaker. India-Pakistan conflict has really picked up. The U.S. and North Korea, well, those talks break down, and some stuff coming out of the U.S. really looks like the economy is getting softer. U.S. GDP slowed. It was slightly better than what was expected, and consumer spending is really dropping off quickly, and we know the consumer is under pressure as we see what's going on in auto loans delinquencies, student loans delinquencies, and that could be signs of something coming up in the future. The high tick for the week was made early in the week and got up S&P 500 up to about 2814, very close to a key number that we were looking at there, up around 2820. That happened on Monday, and then the market really started to slosh around most of the week. However, it's really just a modest pullback, and as we saw on Friday, as news came out that helped the stock market move early to the upside, that didn't really last, and that area seems to be creating some resistance for the market. Still with the pullback, the all-time highs are not all that far from reachable, as we're just something over 3% down from those levels. I'll show you in the short-term view that momentum is continuing to be positive. And I'm also going to show you where the signs are, where a breakdown could come, and we think that may be just days or weeks away, and I'm going to show you that. As volatility contracts, and we've seen that, we're setting up for something big. There are many indicators out there that show that as volatility contracts, you begin to set up for some volatility increase. And that's really what we showed in the last couple of weeks, that sometime just in a number of days, our studies show that volatility will soon be increasing. The bond market may be giving a hint here as to what's going on, and I'll show you that also in our short-term view. Is we've had at least a minor breakdown in the bond market as interest rates now have started to move up again. As the Fed has discussed their pause, they're still allowing the balance sheet to run off here at some $50 billion a month rate. They're back in December and the end of the year, they were in a much different process here. They had been raising interest rates and at the same time cutting their balance sheet, and it was like a double whammy on the stock market. It was way too much for them to be able to deal with, as the balance sheet dropped off from $4.5 trillion down to around $4 trillion, about $500 billion that they sold off. Now remember, when they bought all that stuff. It was easing. When they sell it, it's draining. No matter what they do and how much they down talk that, it's a drain. And there's still another 500 billion that they're targeting coming off before they stop this. So they're trying to soft talk everything, where they say, well, we're on pause on interest rates, but we're still going to let the balance sheet move lower. And they're trying to make it so that the markets don't get scared, because their focus clearly is much more on the markets than they want to let anybody know about. And they're hoping that this pause and the continued selling of securities is not going to do any damage. Well, good luck with that. So now the bond's softening again, and that could be a warning, or maybe our first warning that something's changing here in the markets. We think, and I'll show you this again in the short-term view at the end of the show, that the bulls have a test coming up over the next couple of weeks. We think that what that means is that there's going to be a likely opportunity for the bulls to move up in here based on everything that we see on the short term. However, if they fail that test, if they don't move through on the upside in here in some significant way through that 2820 area, and if they fail in this area, it's going to be negative, and we've been looking for that to happen in the market to fail. However, if they pass that test and they're able to move up through that 2820 something area and hold and accelerate to the upside, well, then there's a test of the highs coming before what I would think is an elongated top being formed in here before that's over with. So is it going to be a test of that and passing and moving up through in a strong way, or is it going to be failure and moving through the key level, which I'll show you towards the end of the show? Well, that's yet to be seen. The jury's still out. We think the odds heavily weigh to the downside on this market. Let's take a look at our 60-minute chart of the S&P 500, which is showing you the intraday trading and the regular day trading, and you'll get a sense for how the news has moved things around this week. We started out the week with this big burst to the upside, as you can see, as Trump came out and said he was delaying the increase in the China tariffs, and says that they're close to a deal, and that they're planning a signing summit. And there's more of that news about this signing summit that came out later in the years. And the Chinese stocks had their best day in 3 years as they moved up. And then out here, as the day progressed on Monday, the president criticized OPEC. And imagine he's doing that with oil at $56, $57, where it made a high of $147. So, they can barely, a lot of these companies can't even make any money with oil at that rate, especially the shale producers. So, but he's criticizing OPEC and the U.S. at record supplies of oil coming out. So that sold the energy stocks off, and we got a pullback from that key area up near there. That was on the cash about 28.14 in the S&P 500, and then Monday we got that sell-off right there. We had housing starts basically fall off of a cliff here on bad weather on Tuesday morning, but permits were only down about 0.3%. So housing starts down about 11%. Case-Shiller home price index up 4.2% year over year. That is the lowest rate in 7 years. You see that little note there, Florida's proof. I'm going to be retiring soon and into semi-retirement. I'm looking at areas in Florida to buy for that and to be there for the winter. Still doing this show from there. And I'm on Zillow, and I constantly get, every single day, notices of prices falling in Florida. Price reduction, price reduction, price reduction. You can get one nice house over there for reasonable money. So is that, just anecdotal evidence of what's going on in the rest of the country? Remember, Florida, a zero state tax state. If that's happening over there, you got to really wonder. India and Pakistan conflict heats up. Two planes shot down, and that affected the market there overnight, as you can see. And then we got all of this news starting to come out about China. And what is his name? Litzinger? That's what it sounds like, right? What is that? Why do we get stuff like that pop up on these screens? So anyway, he comes out and he says there is a trade deal. It's too early to tell if there's a trade deal. And then we saw the trade deficit widen very significantly, but bonds were really hit hard right in here, and they moved down. We're starting to get that breakdown in there. But the stock market recovered when the U.S. news again came out that the U.S. was dropping that threat of the 25% tariff on China, and the markets spiked to the upside in there. More weak data came out from China despite a huge amount of stimulus going on in there. They are really trying to hold that economy together as that growth rate keeps dropping off. And U.S. and North Korea talks broke down. So overnight on Thursday, you got this sell-off, and then you got into this choppy day on Thursday. U.S. GDP came out Thursday morning. It beat the estimates as it slowed to 2.6%. They're really looking for it to slow closer to 2% for later on in the year, and the rally begins to fail. And you can start to get a sense in here. On Monday, the rally failed. On Tuesday, several failures in there. Wednesday, it kind of held together on a recovery. Thursday, you get that failure on the rally. And like I said, there's now this push-pull going where the bulls are no longer winning the battle. And you can see on Friday how true that is the market had a big reversal from a sharp upside move. Here, the Chinese data that came out was much stronger than expected. But the big news was the MSCI was raising China's weighting from under 1% to over 3%, and that gave a big boost to the Chinese stock market, and it lifted our market here. It's also a report came out that U.S. was preparing the final trade deal, and Trump and Xi will be able to sign it. In other words, really talking about that they're close. There's so much skepticism about that, who knows. But then when news came out of a weaker PMI and very weak consumer spending, it seems like the market didn't like that at all, but the bond market really not able to respond very much on the upside. And I'm starting to get a little concerned about interest rates moving up again. And we actually saw the negative effect of higher interest rates towards the end of last year, where the stock market had a 20% decline. So that could be the canary in the coal mine, the stock mine, where we are starting to see interest rates moving up, and I'll show you that coming up pretty soon. For the week, the stock market, very little changed in here. The only notable thing is that the Russell was weaker. That's down small on the week, but still down. 30-year bond market down close to 2 points as 10-year yields move up close to 6 basis points on the week. That's a pretty big upside move. The gold market down $26 on the week, and that's with the dollar actually being soft. So gold lost a lot of relative strength to the dollar during this week. We still think it's only a minor correction. And the intermediate look at the gold market is still quite strong. The dollar, did firm for the at the end of the week, and that kind of helped the bond market, the gold market, and silver moved down sharply on Friday. Silver getting hit pretty hard on Friday. So the dollar down about 0.3% for the week. You would think that gold would be able to do better, and still gold has done very, very well. So we'll still wait to see what that looks like in the next coming weeks. Oil, a very tiny gain on the upside as OPEC again their data coming out says that they have reduced production, but that's fighting hard against a very big increase in production over months and months here in the U.S. and lots of oil out there, and not all that kind of risk that we're going to see a lot of downside in here as far as total supplies go, and I don't think oil's got a lot more upside in there whatsoever. I'll show you that for the short term also when we get to the short term view for the coming week. That's it for the opening, and I'll be right back with the best and worst stocks for the week. All right, before we get to the best stocks for the week, of course, what I'd like to tell you about is our, for 5 days, we only have 5 days left on this special that we're doing. If you become a free member, if you're not part of this yet, if you're just kind of watching this for the first time, if you become a free askSlim member, you're going to get a preview of our level 1 content. This is our stock index report. And our new ETF report that's phenomenal. You're really going to see our chart work, and you're going to see all of the rankings and how each of those sectors of the markets act and how they compare against each other in multiple time frames. Just a great piece of work done by our business guy and our growing analyst Matt, and you will think it's just great when you take a peek at that. So if you already have that, make sure that you put some comments on the bottom of that page. And I think you'll find it fascinating. Also, you become that free member, you're going to get some free videos that we have in there, and you're also going to be able to see a lot of new things that are coming up as we share those with you for beta testing and stuff like that. So become an askSlim free member, get that preview of our level 1 content. You're going to love it. And for people that love the charts that you're going to see come up right now, if you're a TD Ameritrade account holder, which is our preferred broker, you'll be able to get our charts on your platform, or just become a level 4 member. And if you do become a level 4 member, you're going to get all the chart work that we do, and you're going to be able to email me about analysis and trading issues and things like that. You're going to get our rankings and trade setups in the 80 best tradable symbols that there are, our complete video library of nearly 400 videos in there, plus all of that level 1 content I just talked about, the stock index report and our ETF report. All of that you can get as a level 4 member, and you can try it out. We have a trial going on for half price for 1 month, $73.50 for all that analysis that you're going to get. Incredible amount of learning in that video library that you can do, and all you have to do is go to our front page, click on our Contact Us button, and request that free level 4 link. That you will then be able to get in there, get the information, and sign up for $73.50, and then or just write support at askSlim.com and ask for the level 4 link for the trial. So just amazing, great stuff in there that you can have. We produce just a ton of content and do tons of analysis. My 44 years experience as a trader and analyst and coach, and make sure you look at our workshops on our website also. I think you're going to find them fascinating, and you can just get a great preview of them by looking in the workshop area. Any questions on those workshops, you can write directly to me through that contact form also. All right, that's it. Let's get into our best and worst stocks for the week. There's not all that much to show you as we've gotten past the earnings period. Of course, the earnings for the retail stocks come later than the rest, and we've had quite a bit of that. And we're going to start out with the biggest gainer for the week in our universe of 400 stocks that we look at. 300 plus stocks, and then we look at futures and ETFs. So here is a Gap Stores GPS that you can see right there. A very interesting chart when you look at that. As you see, the cycle analysis, again, we do a very unusual, very different type of analysis where we look at the rhythms in the market, essentially money flow as depicted by the cycle patterns that occur. And you can see the rising phases and declining phases right in there. And when you get negatively configured, as you can see this low here and this low here being much lower, what happens is you get your next rally that fails in resistance areas and then moves down but lower lows. Once you get these big rallies like this, and you can see the rally coming right in that early rising phase just beautifully, and it gets above the last high, as you can see right over here easily on this earnings report, then you've got a stock that's really repairing itself. So Gap Stores moves up, and this one, the earnings beat, but the big news is they're going to spin off Old Navy, and they're going to have two separate stocks, and that really enhances shareholder value. At least they believe it. You could see that big move. So this is 2 weeks off the low. The probability of a high in a move being just 2 weeks off of the low is near zero. I mean, those happen about 10-12% of the time. That means that you get a pullback in here over the next couple weeks. It's likely to surge up again, and we show you our resistance here on the chart at around 32. So you can buy this around maybe 28, 29 if you're a short-term trader. We think it'll be heading up to 32 or even higher, as this news definitely will keep investors interested for a while. You just watched the opening to the askSlim Market Week show. To watch the full show, just become an askSlim free member. It includes my analysis on the best and worst stocks for the week and my short-term view in 5 major markets for the coming week. You're going to learn a ton about charting, technical analysis, cycle analysis, my unique way of looking at charts, and we show lots of ideas that may bring some great setups for you going forward. Here's what's in that great offer that I think you're just going to get a ton of benefit from. You're going to get the full Market Week show. You're going to get Market Week archives, the special videos from our premium library, sneak peeks to great new products coming up, and all kinds of things along the way that we're going to put in there that you're going to enjoy. All you have to do is become an askSlim free member, and there is no credit card necessary. Please do join and take advantage of that, and watch the rest of the show.
I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been